Good evening, everyone. If there's anyone in the chat, let me know who's here. Maybe type in your name and where you're located at if you can. No, I don't trade binary options. Hey, Matt, how's it going, man? Good to you on the stream. Keanu, if that's how you pronounce your name, Keanu, I'm sorry if I butchered that, but um, options, futures, e-minis, and everything of the such, I don't really trade it. Um, I've done a little bit of research on all of those. I really like the concept of futures and options as well, but um, my trading strategy was developed through trading currencies, and all the tools and the setups and the percentages and the numbers that I use are very specific and exact. And what I found that my problem is with options as well as futures contracts is it's especially with options because the value of the contract degrades over time. So your risk is fluctuating at all times as opposed to being kind of set going into the trade and staying the same regardless of how long it takes for the option to exercise itself. It's just a different money management system, and I would just have to rethink my whole money management. And I learned how to be profitable in foreign exchange, and I've acclimated that to stocks. So I just kind of avoided looking at anything else. But I mean, it's a work in progress. Like this year, I'm tracking all my results, and I'm trading a very vanilla version of my trading strategy. And I'm going to use this year to see how many trades I get for the entire year. And I'm going to go back and analyze every single one of the trades and get some data on which trades had the biggest probability to hold for longer profits, and get some statistical data to help me change the trading strategy. And next year, I'm going to implement those features into the trading strategy in 2020. And a part of my growth is I like to incorporate options and futures, but I just really have to spend the time to come up with a good money management system for it, and I haven't done that yet. And I have my hands full just acclimating to the stock market, so I just haven't spent any time on it. But in the next year or two, I'm probably going to add options and futures to my portfolio. Zatik, I hope that's how you pronounce your name, from Georgia. Appreciate you on the call. I traded with foreign exchange first because I day traded, and historically, I think currencies are probably the purest form of trading because they're not controlled by a central exchange, and maybe more importantly, it's an over-the-counter product, and the participants are so big, and there's so much volume and during the course of the day that no one entity can really control the currency's price, and I like that. It comes down to pure herd mentality, which is pure trading for me. There's a lot of manipulation that can go on in the stock market. And that's why when I kind of converted my strategy over, because charts are charts, and they tell you human reaction. It's just a visual illustration of human reaction to the same stimuli over and over again. That's what the chart does for us. But in currencies, it's an over-the-counter product, not controlled by an exchange, and the players in the market are banks, and they're moving, central banks, and they're moving, 50 million, 100 million, $1 billion at a time all day long, and it's running for 24 hours. It's just a different animal, and it just seemed more pure herd mentality as opposed to the stock market, which can be manipulated by one major player. Like if Warren Buffett wakes up tomorrow and picks any random stock and says, hey, I want to shoot this price up $30, he can do it with his money, individually. You can't do that to the euro. I mean, it's going to be a collective effort to push the euro that far, So I like the pure herd mentality. If you do a little study on charts and price action, it's really just a study in herd mentality and psychology, really, is all it is. So I like the pure form of that. But the difference between stocks and foreign exchange for me is, in foreign exchange, there's too much correlation because everything's tied back to the dollar. All 7 major pairs involve the dollar for the most part. So you can trade one or you can trade the other, but you're still trading the dollar. Whereas with stocks, there's a lot of correlation, but I can find 80 or 90 different stocks that do not trade 100% the same or inversely correlated. They can be 80% the same, but that little bit of variance can mean the difference between profit and not having profit. So you can kind of, what's the word I'm looking for? You can diversify your trades. And diversification is always good. I mean, a lot of people preach against diversification, but I think, like, if you're trading stocks, that's what you picked. And you can diversify within your strategy, within which ones you trade. Ray Dalio, you should listen to him. He's got those guys, they don't lose money over there. And it's from a fear of losing money. And they've created a model of diversification across multiple asset classes, multiple different things. And trying to time the market is the hardest thing to do, especially if you're going to day trade. I don't think a lot of people that day trade know how hard it is to day trade, So if you can find a way to diversify, that always helps out your record. Hey, Ernest, welcome to the call. All right, guys. I mean, there seems to be a few people here. If y'all want to get started, just any symbols or anything you want me to take a look at, and we can kind of put our heads together and come up with what we think. Just put it in the chat, and I'll start running through them one by one. Am I still live? Seems like it went dead on me. Okay, no, we're good. Brother-in-law, good to see you there. Appreciate you joining the stream. All right, let's start with Netflix. Netflix beat me up last week. Very inconsistent chart. Okay, so Netflix is one of the ones that last week, the sideways action and kind of the movements that it created. So it reached monthly support here, monthly resistance, I'm sorry, here mid-January. All right, looks like this is around the 14th or 15th. And there was a reaction there, but that the high that was put in didn't hold up. And you had polarity change back to the upside. What that did is it created a level of support. That's what these blue lines are. In my opinion, this created a support level on Netflix's price, between 328 and 336. So the polarity of the market on Netflix is currently up on a weekly level. And we had a kind of like a break in polarity today. You see that the price was headed up, and this was the angle of the ascent, and today we closed on the other side of that line. So I would expect some downward pressure over the next couple days, but there's been support put in at the 336, 328 level. So I'd be pretty careful if I got into any type of short trade now, that you may get a little bit of pullback. And typically what you see, and everything is typical that I show, but the market rarely does exactly what you think. But in this scenario, if it was going to play out exactly how this is written. So what you have here is price came up to resistance on a monthly level. It had a reaction. It pushed through, made a new high, which takes all the stop losses, or a lot of the stop losses, out for the people that entered trades in here thinking this was the part where it goes short. So you cleared out the market a little bit, which gave bigger money a chance to go short and clear out some of the riffraff that got in here. All right, so this is the start of the move. But now you've put in support down here. There's going to be buyers that believe that the price is going back up because of this action right here. The failure of this to hold and then break into a new high causes new buyers psychologically ready to buy here. So typically what you're going to get is something that looks like this, and then it's going to come back up. Now, this is where the decision happens. If the market truly is supposed to be down, it'll probably fail on the retest of the high, and it should break this low. Okay, but conversely, let me see if I can delete that. Conversely, if you're going to make a case for the up move, it would kind of do one of these numbers. Maybe it would get resistance there, but then the retest of the down move wouldn't go any further, and then you get a further move up. So typically when you get in these areas, you kind of get a either or scenario that can happen. No one knows what's going to happen, but these are the probabilities. So what I found historically is the safest trades are a couple. This is a pretty safe trade, a sell at this point. Like if this retraced back a little bit, maybe it tests this high. A lot of times you'll see the market come back and test a high or eclipse it by a little bit and take out the stops and then continue down. So you have to be really, really careful at the tops. It's not as common at the bottom, but so if you catch the bottom of a down move, it's not as common as it is at the top for some reason. I don't know why that is, but there's a lot of stop hunting that happens at the top. So here you may get a move up that it tests this high or break this high, but it's a pretty high probability trade right as this trend's been broken to sell this thing down, knowing that there's going to be support here. So that's the normal way of things, but then from there you don't really know what's going to happen. It's a monthly resistance area, so in theory, if you look at a longer time frame chart, it should look. See, if you look at this from that perspective, the market made a move down. It's retraced back. The candle body's getting small. You're getting this inverted hammer. You might get a red candle next week. It just looks like it's going to go down, but you don't know if this blue line is going to support and it's going to continue going up, or you're just going to get some type of a reaction there to take you up to the next spot of resistance to enter short to go back down. So these are things you don't know. It's an if-then approach, So I try not to predict that far in advance on the market. So if I was trading this, as a matter of fact, being honest, I'm going to look for short tomorrow on Netflix. I'll put it through my system and I'll look for a short here. And but I'm going to be completely aware of this area. Not saying it's going to hold up, because I think true support is somewhere down here. But it's enough that the reaction from here could come up and take out this high, punch through it, and then fail and then drop down. The market, the timing is the hard part of the market. It's not being right or wrong. I can pretty confidently say that I think that this price is going to go down and test this low. I don't know when though. It could be this move that started here, but I could have thought that here or thought that here. You see what I'm saying? So the timing is always the hard part, not really the direction. I think the direction ultimately is going to go down, just like SPY, but it's taking its time getting there. Let's look at NVIDIA. Skipping ahead to your question, Anthony, the indicators. Well, let's do this and then we'll talk about indicators. Here is kind of the same thing. The long-term direction on a monthly chart is still down. The polarity is down. The weekly direction is up. And if you look at where the monthly resistance is and where the weekly support is, there's plenty of room. The easy play here, you would think, is that the price would come down, test this area, and the move would continue up. And if we look at it from a weekly chart, we had this big giant move down. The price would be considered, this is where the sellers typically enter. And normally you get a reaction at a 50% retracement as well. But that retracement typically is the one that comes down and lets you buy it again to push it further up, historically. And I've got data for that. So this area here is where the sellers are. So there's a lot of area, a lot of room here for this price to go up, in my opinion. So, and if you look at this, it looks like a bottom. Polarity. Here's the This would be considered a supply line, and the reason you call it a supply line is because the supply outweighs the demand, so the price is going down, as defined by Tom DeMark. And as you see here, price broke on the other side of that, which breaks the rate of rise or rate of fall, and which represents a change in the momentum of the move. And normally, if that happens at a support or resistance area, that's a pretty firm trigger to go short or long. But in the middle of the range, like my support resistance lines change every week and every month based on the current market conditions. So they're always current. So I don't know where the lines were at this point when it came down here, but you can see it broke through and changed kind of polarity, started going up. Here was the first retrace. Now it's going back up again. And if you look at those arrows, I bought this. I don't know if you guys remember, but like 3 weeks ago or 2 weeks ago, we bought this kind of like while I was doing videos. I bought this one. So but I got out of the trade because I never know if it's going to go up or turn this way. So right now with NVIDIA, support is still right here. In theory, you would think you're going to get some variation of prices going to continue down, bounce off support, and then you got a lot of room to the upside. But, remember, fundamentals trump technicals. So, really bad news comes out or any kind of craziness happens with NVIDIA. They don't have earnings or anything. They just had earnings. I think it was 2 weeks ago. So we should be good on that. But, let's see, earnings. Yeah, earnings was about 6 or 7 days ago. We don't have the next one till May. So I think we're good on that as long as there's no crazy news. I think the trajectory of the market is up for NVIDIA on a weekly chart, and on a monthly chart it's down. So, but we have a lot of room between now and where the down move should start. So that's where I'm at on NVIDIA. Let's see. Facebook. I remember Facebook was in the middle of the range. Last time I looked, I think it's still there. Yeah, so here's weekly support. Polarity on the weekly chart is up. That could change on Saturday. I don't know. But as of right now, and this represents about a 50% retracement of a longer term move. And we can put the fib on there so you can see it. I haven't drawn this before, but I mean, just eyeballing it. Let me turn the magnet on. I didn't like TradingView's platform because I didn't know that they had that magnet. The first time I tried to use the platform, I didn't know the magnet was there, and it drove me insane that it wouldn't automatically click to the high or the low of the candles. That was driving me nuts. It was slowing me down. But once I found it, I felt better about it. All right, so this is the 50% line right here. Let me put a line on here for you. Okay, so you see what happened is price came up to the 50% retracement level and had a reaction there. And this is what I was talking about before. A lot of the time you'll get a reaction at the 50% level, which just pushes it down for buyers to buy it back up. And you ultimately get back into this resistance area and it turns. But I mean, there are no guarantees in the market. So we'll see what the polarity is and how the charts look after this week. But as it stands now, I think Facebook is just in the middle of the range. The polarity on a weekly level is up. It's bullish. But on a bigger time frame, like most charts, it's bearish. But we have some room before we get to a 61% retracement. So we've retraced 50%, and markets do turn at 50% sometimes. But there is going to be some support down here. So if I was trading this, it depends on your time horizon. In the day, I'd be looking for short right now because the polarity on this daily chart is down. I'm always weary of middle of the range moves though because they're very unpredictable. But daily polarity is down, weekly polarity is up. So, and monthly polarity is down. Okay, what does all that mean? Daily polarity down, weekly polarity up, monthly polarity down. That's kind of what that looks like. Okay, so, and I mean, again, that's in a perfect world. If and or if then type of scenario. You don't just, if you ask me to draw it, that's what I think it would look like. But, in real time, it doesn't always look exactly like that, but some variation of that. So if your time horizon is over the next couple of days, I'd probably be looking for a short position. Once it gets to this area, I'd look for a trigger for a buy position or confirmation that it's not going to push lower. And then once we got up here, I definitely would do no buying. All right. So that's where I'm at on Facebook. Let's see. BNB is a crypto. I don't know if the cryptos are going to pull up on here. Is that BNB? Is that the BNB BTC that I'm looking at right now? Binance Coin versus Bitcoin? Is that what you're looking at? Okay. Yeah, okay. So we got the right one. All right. So, this is a chart I've never looked at. So you want to start with a top-down analysis. So let's take a look at the bigger picture. Now, cryptos are funny because the fundamentals of crypto are a little sketchy, and not trying to talk about any particular crypto, but just in general. Let's look at CoinMarketCap. You got BNB. All right, so I mean, that's pretty high volume. It's doing 86 million a day, so that's good. And all right, so let's look at the chart. Polarity currently up on a monthly level. I mean, basically, you've had this big move up. It's come back and retested. And actually, if you look at this, it looks like about close to a 78% retracement, and it was. So there was a low put in here in March, and almost 78% retracement. Retraced about 68%, turn, made a new high. Polarity's up. All right, so that's what we know there. And the last move, the last turn was here. And if you're going to trade it, wave by wave, this is how you would set it up. So you go to a weekly chart, and I'm thinking there's more buyers down in this area. It's typical trading 101, right? People buy stuff when it's on sale. So if something goes from, let's say, $1 to $100, there's a price that says the majority believes it's a really, really steal of a deal, and they need to get back in and buy it. So if it went from $1 to $99, typically that price isn't $96. That's general public, that's retail. We're investors. Everybody that's in the market trying to trade is an investor. So, and when you're a large institution, you're moving so much money, you have to scale into your positions. You can't do what we do and just enter one trade that represents 1% of your entire account at one time, not when you're trading $100 billion. It doesn't work that way. So you have to strategically scale into your positions over time. And that's why big institutional traders typically are entering in their positions at these levels because they're waiting for a product that they believe is going up to be on sale, or a product that's going down to also be at the proper price to sell it back down. So that's why this works. If it went from $1 to $100, what Fibonacci basically says to me is between 60 and 80% retracement, it's on sale. What that means, if you put it into dollars, was to basically say that when the price reach between $20 and $40, all the value guys are going to jump back in and start buying it. That's all Fibonacci is telling you. The prices went up. It made a new high. Went from 1 to 100. When it gets to $20 to $40, they start buying it again because they really think it's on sale. That's it. That's the common sense approach to what this all means in real life. So there's going to be buyers down here of this coin. There'll be buyers down here. It's just human psyche. And it doesn't matter what indice, what asset you're trading. It works the same across anything. If you're buying a Nintendo Switch at $300, it's retail. If you find one for $170, you buy it. It's really that simple. So there's going to be buyers down here. Right now, the market is not retracing yet on a weekly level. The polarity's still up. It's still running. We know where the buyers are, but have the sellers taking control to push price down there. And the reason price goes down there is a lot of times there's exhaustion. There's only so many buyers in the market because there's always a balance of how many buyers versus how many sellers are in the market. And that balance is what determines the price. So there's always sellers and there's always buyers on everything. But what happens is, as the market goes up, up, and up, and up, there's no more buyers in there. And a lot of the buyers start exiting their position to take profit, which turns them into sellers. And that's what creates the downward pressure that you get. And then the momentum traders jump in on the momentum of that sell pressure, which really is just profit taking. And they start selling the market and pushing it down, which causes capitulation and fear from the people that are holding their position for the longer term. They're thinking it's going to come all the way back to their price. So they start jumping out. And it's amazing how that works. And that's the cycle over and over again. And then it gets down to where the buyers are buying it again, and it's on its way straight down. And the money that got in real late, they're really losing their money, because there's going to be people that bought up here and they're just going to suffer all the way down. So they start selling their positions too. And typically the way markets work, around this area right here, that cycle kind of runs its course. You run out of momentum sellers, you run out of people exiting their position because of fear, you get new buyers in the market because they think it's on sale, and then the thing reverses here and continues in that same direction over and over, on every time frame, on every chart, on every indice, on every asset. It's just human reaction. It's how we work. So I don't know how I got on a tangent on that, but for this particular one, buyers are down here. Let's zoom into the daily chart to see if our sell pressure has started. Okay, so if I was to put a time to mark demand line, because this direction is up on this chart, it's still up. And the trajectory of the up move, like for example, let's look at something here. Right here, sellers came in. Okay, here was the trajectory and the rate of rise of the market, and you punched through it, right? And sellers came in. Here's the first retracement, which was a 78% retracement. I know that because I can eyeball it. All right. All right, let's zoom in on an hourly chart. Let you get a better look at it. All right, so here's the 78% retracement. The price came up, so the polarity changed here on this down move. Price came back up. Here's the 78% retracement. See, almost to the T. Sellers came in, but you see what happened is price failed to make a new low. And you know what's interesting? You know what this low point right here is? A 78% retracement of this move up. Think I'm wrong? Watch this. I hope I'm right, because I'm acting kind of arrogant right now. My mouse is really sensitive. Okay. Just missed it. Not quite a 78, so I'm wrong by a little bit. So, but this is between 61 and 78, and here's the retracement level right here. 78, it was at 0.0024, and it came to 0.0024579. So we missed it by a little bit, but this is this is probably about a 76, 77% retracement of this move up, and the buyers re-entered the up move. So if you zoom out and see what does all that mean, it's kind of confusing, but it's really simple. We had a polarity. It broke the up move. Hold on, let me redraw it. All right, so you broke the upward momentum here, which triggered a lot of people thinking it's a sell. So there were a bunch of sellers waiting to sell it. They sold it, but there was not enough conviction there to take it and make a new low and continue the down move. So it failed. So the up move that was a retracement was actually the next wave up. It failed there, and buyers jump back in, and it goes back up. You see how that works? So even this is the structure of price. Typically, price turns 60 to 78%, 60 to 80% almost in every direction. The hard part is knowing which direction is the right direction. And that's why using multiple time frames with different energies, monthly energy, weekly energy, daily energy, that's why it matters, because the bigger the time frame, the more heft or weight that's behind it, the more money behind it, and the more reliable they tend to be. So I know I've been talking a long time about Binance here, but basically what I see on this chart is the polarity's up. There should be buyers down here on a longer time frame level, or a longer term level. And right now we had a break in the direction, but it recovered and went back the other way. So their strong polarity is up. So I wouldn't short this. I don't like buying at tops either. So it's just untradeable for me as a swing trader. I would wait until I had a break. Like I would have been in on this trade here to go short, but I would have been out at the area where it turned. And I would have made my 2-to-1 profit in that small window. You see? Because I don't want to predict that the price is going back down to get to here. And if it would have broke this low and made it, I have another trigger that would have got me short again to get some more of that move. But I don't try and predict on this trade whether I'm going to make it here because my timing's bad. It could turn right here. And this could be the part where it does break kind of the polarity and start going back down. But I would have been wrong if I would have sold here and just, wouldn't have got out here. I would have been around for long enough to get stopped out here just to watch the market turn and take me out. And I'd rather make a 2-to-1 risk reward in the process of that. And if I'm right, I'll get in again on another trade. So I scale into my positions as well. Okay. So I wouldn't sell it now, and I probably wouldn't buy it now because it's at the top of the range. So, but that's my thoughts on that. I hope that answers your question. Hey Ernest, welcome to the call. Oh, okay. And Anthony, why don't I use indicators? Let's go. Let's explore that real quick. Now, I've run through the gamut of indicators. I know a lot of them, how they work, and I'm a big fan of a few of them. I really like Bollinger Bands. I think RSI has some usage. MACD has some uses. It's a little too complicated for its own good. I mean, it's simple, but at the same time, the divergence and stuff is just, historically not really my thing. And of course, moving averages. I think moving averages are really great because I like really simple stuff. And moving averages are great because an average by definition is supposed to be close to what the price should be. By definition, the average is the median. So when price gets too far from the median, the odds are really, really high that it's going to go back the other way to get closer to the mean. And that's just historically how things work. That's how an average works, right? So let's look at SPY. So if you look at the monthly moving average, so like, let's put a moving average on this thing. Let's use a simple moving average. So if I put a 200-day moving average, watch how far price is away from the 200. See how far that is? And, so among the things that make me think that our market is on its way down for like a larger down move, a big portion of that is not only have we had one of the longest runs in the history of trading the markets, but we also had this 20% drop, which is normally a precursor to larger 30, 40, 50% moves. The run is old. Our economies, the global economy slowing, our economy slowing, it looks like. All the different factors. But even a giant one is just look how far we are from the average price. This is way over bought, basically. So if you put an RSI on here, let's put an RSI on too, just to add some validity to what I'm saying here. Overbought condition right here. We've gone too far, right? So we're way away from the mean. We've gone too far. And look at all this. It tells me this on the indicators. Well, here's my problem with indicators. These bars don't come into play until after the price has moved. They lag. They're not leading. I like leading indicators. And so let's give an example. Well, man, we had a good example in that chart we were just looking at of what I'm talking about. But let's look at this chart. All right. At this point in the market, let me get rid of this indicator real quick. All right. So at this point in the market, this was the direction of the market. All right. So we're looking at the SPY, and this is in October, November, December, January right here. Okay. So this is the angle of the ascent. So price punched and closed through on the other side right here. And this could give me a reason to go short, because this run up is over for all intents and purposes. Price has told me that it's not going up anymore. So now I'm a seller. Now let's say I had an order waiting to sell this if it pulled back up at 78% right here. So I'm going to put a little line. Let's not do a blue line. Let's do a small horizon line. Okay, so I'm going to buy this deal when it reaches this little small orange, what is this color? Burgundy line. I'm selling here, okay? My stop loss is back here somewhere, and I'm selling. The problem that I have with a moving average or any kind of a cross or RSI or any of those things, it doesn't catch that I should be selling here until I get somewhere over here. They lag. And in the market, you have to have a competitive advantage. And for me, my competitive advantage is I understand price and how it moves to the point that I understand I'm going to lose trades. I cannot eradicate that from my process. I will lose trades, period. So the thing is to go through the charts, find the most probable areas where the odds are going to be on my side, and take those trades before I get a ton of confirmation that everybody else is looking for. Everybody else wants a ton of confirmation, divergence, crosses on shorter term moving averages, oversold, overbought, outside the oscillator lines, whatever the thing is. But the problem with those is you need all the bars to be created first, and then it throws you a signal, and they're almost always late, So even a moving average, if I'm just watching the angle of the line and everything like that, if I zoom out on my chart, I can find out the same exact information without needing to complicate my chart with an average. and you want to keep trading as simple as possible, because trading is really, really difficult. It's really difficult. And a confused mind, doesn't know what to do. You don't think clearly. So I try and keep indicators off my chart to keep my mind clear. And I've researched mostly strictly price action, but I can almost tell you almost every time when something's oversold, what the direction of the market is, just from looking at the chart. And I'll show you an example. But so right here, I don't know if I would have. All right, let's put an indicator on it and see if an indicator gave us some type of indication to sell. Well, you know what? Let's not do that, because there's a million different indicators with a million different entry rules. But I prefer leading indicators based on price. Polarity changed here. I'm looking to go short. I pick the levels that I want to sell at, and I sell it, and I live with the consequences. I use strong money management to make sure that if I enter here and my stop loss is here, that the distance between from here to here is no more than 1% of my account balance at risk. And if I lose the trade, I lose 1% and I move on to the next trade. And I have 10 different trade setups that I trade consistently, and I track all of their results, and they're based on this same fundamental idea. Once I know where I want to get in, I pick my spot and I buy or I sell, and that's it. And if I'm wrong, I lose, and my winners are on average 1.8 times the size of my losers, and I never risk more than 1% on a trade. And if you can find a strategy that's accurate 40% or better of the time, you're going to make money with that strategy. So I choose not to do indicators just to keep my trading more simple, because my rules, my entries, everything that I have is complicated enough. Like I make it kind of easy as I'm talking to you. Oh yeah, I sell here, but how I structure the stop loss, what my exact math is to get out before I get to the 61% retracement of this up move, which is the counter direction, which the price that says I'm wrong. There's exact math to make sure that I have a 2-to-1 risk reward from here to there. And there's a lot of rules, so I don't need to complicate it with a bunch of squiggly lines and divergences and oscillators and all kinds of other stuff, because it's complicated enough as it is. And it's lagging. It's the same information I would know if I just looked at my chart. Like if you had a moving average on here, it could tell you what is the direction of this stock. But you know what else can tell you that? You zoom out like this. It's up. No need for a moving average. It's up. You can pick any stock, and in 3 seconds, you can tell me the direction. It was up, reached a high, came to that high, made a double top. That low that it made, it hasn't gone beneath it. It's in a range. It's going sideways. There you go. No need for moving average. And how far this is from the moving average, that would be a good indicator if I was going to be an investor long term. If I was trading the SPY right now, there's no way I would buy SPY at its current price. We're at monthly resistance. It's been going straight up for 10 years with no major pullback. I mean, some people argue that 2015 was a major pullback, and on top of all that, the moving average was way down here. It has a long way to go and reach equilibrium with price. So I definitely wouldn't sell it long term, buy it long term. But if price came down and touched the moving average, I would definitely buy it if I was an investor, because the markets over time go up. That's what they do. And a reason, a large reason for that is inflation. I know I'm ranting a little bit here, but every fiat currency in the history of mankind has gone to zero. So by definition, the longer a currency is around, the market that's traded based on that currency should go up, because the value of the dollar is gonna go down, which by in turn makes the same stock worth more dollars. So over time, the market should go up. Like if you're an investor, just buy SPY. Next time it comes down to the 200 moving average, buy it and just hold on to it for 10 years and you'll make a ton of money. Because over time, our money loses value and there's inflation. So whatever you bought it for will be worth, 10, 20 times that 20 years from now. It's just how it works. So, that works every time. But that's why I don't use indicators. They're useful, but you want to have an edge, and I don't feel that they give me the proper edge. I think trading price and spending thousands of hours like I have reading charts is the advantage that I've created for myself, to know where price typically turns. It took a while to learn the structure of price, but once you get it, it's pretty predictable in certain spots. So yeah, man. It's just my way. Let me see. I don't know if I ever told the story, but when I first started try to get into trading, it was around 2008 2007, I think. And I wanted someone to teach me how to trade. So I spent a couple $1,000s hiring different like people to coach me, to teach me. And what I learned is that nobody knows how to trade. Like I read all those statistics about 90% of the people in the market are losing their money, and you know, it's impossible to day trade and all this stuff. And I took it as a challenge. I said, you know, I'm going to figure this thing out. But I hired a bunch of people. I bought courses. I did a bunch. I was really committed. And all it taught me is that everyone's selling a gimmick. None of these people actually know how to trade. None of them. And it was unbelievable. I went through probably 5 or 6 people. I bought some of those robots that you buy that automatically trade an account. And I put them on demo accounts, and they would work for 2 weeks. And then they blow up a demo account. I'm like, no way I'm putting my money behind that. Then I found people that did coaching, people that have courses. And I got on the phone with one guy, and we got on the phone, and we were supposed to do a 1-hour session every week. And I think it cost like $1,000 or $2,000 to get this course. And he didn't know more about trading than my mom. Like literally, this dude knew nothing. And my mom's a really great person, but she doesn't know anything about trading, right? And he knew nothing. And I'm on the phone, and he would say, yeah, you should do this and do this. And it was filler. And then I would ask the question, why am I doing this? What's the reason? I'm one of those I need to know the why kind of people sometimes. So he just never had an answer for me. There was no strategy. There was no pragmatic, fundamental approach to this thing. It was just random, and it's, you know, I got your money. So what it made me do is, you know, I cleaned up my charts. I got rid of all that stuff, because everything I read is like pro traders trade off price action. That's what I always heard, you know. And I knew somebody that traded on the mercantile exchange, and he said, man, real traders trade off price action. We don't have all that stuff on our charts. So, you know, I just tried to learn price. So I got out a pen and pad. I went back to the trading software that I had at the time was MetaTrader based. It was in currencies. And I went back to like 1978. And it was on the pound dollar pair that I started with. And I actually went from 1978, and I tracked every type of move, and I put Fibonacci's on it to see where price turned. And it's just, I spent thousands of hours just looking at price, charting it, writing stuff down, going back and looking at it, comparing it. And then, you know, eventually it turned into a plan. You know, luckily I found Tom DeMark. Those supply and demand lines are probably the most important tool in my toolkit outside of fibs. And fib is just a price ruler measuring percentages, so it's not really anything to that. But the timing of the market using the trend lines, the demand and supply lines, it's imperative. And then when you learn how to use fractals, which is basically, you know, what I show you here. So now everything is kind of. Okay, sorry guys, I think I lost y'all for a second there. I don't know where I was at. It just told me that it cut out. But I don't know where I was at. But this is what you see here is a culmination of everything that I kind of learned. And so now when I trade off of a daily chart, what you see here is the monthly chart breakdown, the weekly chart breakdown, and the daily chart breakdown all on the same chart. And it's powerful. Like these lines, you think that I drew them after the fact, but I don't. The price goes to these areas and it reacts, and then it goes to the next area and it reacts, and it's very predictable at some spots. But the only way to learn that is price action. You study price action and you figure it out. And I'm not saying trading indicators doesn't work, because everything works. It's just whatever strategy you're trying to use, check the viability of it and how it performs over a period of time, and make sure it's legit. And if it works, then it works. But I think fundamentally, trading price action works better, because there will never not be humans trading the market. And these charts are basically fear and greed personified. So if you learn how to read the chart, it's learning how to read the people that are trading. And until trading is handled by robots that independently think and make decisions, you know, AI level stuff, not necessarily people that program them, then I think the strategies that I'm implementing will work, because it's based on people. Like, this is a really horrible example, but I have to make the point. If you were to walk into a crowded area and pull out some type of a weapon, there's a certain percentage of the people that are going to run. There's a certain percentage of the people that are going to freeze in fear and hide. And there's going to be a certain percentage of the people that are going to attack you. The thing that's crazy is if you did that in 100 different places, in 100 different cities, in 100 different countries around the world, the reaction percentages wise would be the same, would be similar for each group of people. because people are the same. And these charts allow you to find commonality and put odds on your side. So you're like, hey, if I go in this room and I say, hey, I've got a hammer, and you start screaming like a crazy person, and every time you do that, 70% of the people run out of the place, then the next time it's going to happen, you've got a 70% chance that you could bet on that being what someone's going to do. And you could be wrong. You could catch the guy that's going to run up on you and bust you upside the head, or you could, catch the person that's just going to go hide somewhere, and you bet wrong on that person. But you probably have a 7 out of 10 chance, if you've watched it historically enough, to know that this is probably what's going to happen. And the charts are the same way. So price, the thing about price is it encompasses every participant in the market. No one can hide from price. Like, you never know who's buying or who's selling or who wants what at what price or which, you never know none of that stuff, but it's all reflected in the price. We collectively said on December 24th, we're not paying any lower for SPY and it went up collectively, all of us, everyone. This is a collective decision of the market. Price is the collective decision of the market, and it means something. This high was put in here on October 18th. Price came back up. Collectively, the market said, no, we're not going higher. We went back up. Collectively, the market said, no, we're not going any higher. You should pay attention to price. Price tells you, it talks to you, it's live, it's breathing, it's living, it changes all the time. So I don't want a lagging indicator. I want an indicator that's going to tell me about price and as fast as possible. So trend lines, support and resistance, these are the things that give you an edge to quickly assess the market and get into your positions quick. I think when the stream kicked out, we lost a bunch of people. Is anybody still there? Matt, you there? And I think I don't know if it recorded the whole time while I was away. I don't know what happened or where it cut out. I'm in a different country, and my internet is not ideal here. So, by the way, I'm traveling back to the States on Saturday. So the weekly review video, I'm going to try and get it done Saturday morning before I leave, before my flight. But if I don't, I may have to do it Sunday. So just a heads up on that. Maker, let's take a look. What is Maker? Maker's Laboratories? Is this the right thing right here? New crypto? Let me see. Symbol MKR. I don't know if I'll be able to get a chart on it. Oh, okay. Got a chart. All right, let's go top down. And, it's kind of hard to glean a trend per se, but you can kind of go with polarity. Like for this one, if I was going to go with the supply line, it would look similar to this, which where it crossed there. And then if you were going to do a demand line, it would look like this. So the supply line was broken, demand line is intact, which means the polarity is up on the market for this particular one. All right, so then we go to a weekly level, and polarity is also up. The last time the market swung was here, made this low on January 19th, the week of January 19th, made a low. And so I'm assuming there's going to be buy pressure in this zone here. All right. So now the question is the market trending down to go to that area? And on a daily level, let's see. I'm trying to eyeball this. I think I see polarity still up. I mean, I wouldn't feel comfortable selling this short on a daily level. Now, intraday, you know, it may, but right now, polarity's up. I think the buying area is here on a daily level, and it could. Now let's zoom in a little further. Let's go to a 4-hour chart. Yeah, polarity on a 4-hour chart is down. You had a break here, had a high put in. Here's a 61% retracement. Broke polarity pretty much here from going sideways. So the bias is down on a within an intraday level. I would be weary to sell anything down here. And if I'm looking to buy it, I don't know if you can go short on the coins, but if you're looking to buy it, I think the safest buy would be somewhere down here. But intraday, it looks like polarity's down. Daily chart polarity still up. So the intraday polarity hasn't gone far enough to invalidate the daily direction, if that makes any sense. So direction of the daily chart is up like this. Here's the angle of the rise. Okay, so closing on the other side of this could mean that it's more of a downward polarity, but then you'd be at support from a weekly level, which would be a dangerous place to sell it. So if you're looking to buy, I mean, I don't know if now would be the time, because you've got some sell pressure that's kind of come in, especially on that intraday chart we looked at, the 4-hour. So if I was going to play it, if I was trading day trading, if you can sell it, I'd probably look for a short opportunity, knowing that there's buyers. And then also this move up here is probably going to have some buying pressure here to kind of stop you up a little bit too. Okay, from the last move up. So the daily area is more down here, or weekly area is more down here, but intraday you probably could get beat up pretty good once it gets here. So in a perfect world, you're probably going to get some type of variation of a sell. Oh boy, that went wrong. Hold on. You're probably going to get some variation of this. Down to here, up to here, down to here, up to here, down to there, up to there. How in the world can I say that? Just what I think. You typically get a bounce off this support. Bigger picture, it's more important that it gets down to its weekly resistance or support level, which is why it probably will fail here, come down, touch the support level. There will still be resistance here, which will react. Bigger picture is up. It'll fail there and go up. That's the textbook version of what I see based on the chart. And I know it's kind of crazy to try and predict this, you know, all the way out, but this is what I see. So what I would look for is buy opportunity here. Well, sell opportunity here if it comes. Buy opportunity here. Buy opportunity here. Buy opportunity there. And I'm probably not in any of these sell positions. Maybe this one. Let me see. Is this a 50% retracement? Once it goes 50% retracement, I don't sell against the main direction because it's just a low probability trade. So intraday short. I know you trade off a 2-minute chart. Yeah, I think that's what you told me. So intraday, I would be looking for short positions. Jojo, no problem on Bitcoin. Yeah, I still don't own enough Bitcoin that I want to own because I think we have a little bit of time. This, you know, let's look at SPY real quick. I think we have a little bit of time because this long upward move, by the way, you know, this red candle closing on the other side of this trajectory is a very bullish signal for the SPY. So anybody that's long and has positions open, I'd consider that. Just FYI. But what's happened with SPY and why that relates to Bitcoin is All right, so for spot, here's what I see here. You know, you're gonna get one of these. I think one of these kind of deals here. Okay, we're gonna come down. We'll probably get the bounce here. Some variation of this. Okay, and I don't know where it's gonna go from there. All right, this is what I think is gonna happen, because I think remember there's support right here. A lot of my charts have put in weekly support in this area. So I think there's going to be a bounce. Like this turn is not necessarily the turn is going to go all the way down. I think it's going to be a bounce here. It's going to come back up, and there's going to be sellers in here. And if this down move is going to hold up, which I think it will. Now, you could get one of those temporary punches through, takes out all the stops, and then comes back down. But I think ultimately it's going to come down from here. And when it starts falling, I think it's going to fall. Like once it breaks down somewhere in this range, she's going to fall. We're going to see one of those 2 or 3 or 4 day capitulation type moves where everybody starts, you know, jumping ship. But there's going to be a ton of buying pressure down here. And so that's going to play out. And then when it gets up here, there'll be indecision. You know, there'll be sellers here. There'll be people that think we put in the bottom and this was just the first wave back up, which is normally larger than this wave. So there's going to be a war fought here and here in the market, and I have no idea what's going to happen. I'm long-term thinking bearish, so this is why I drew the line this way, but I have no idea what's going to happen. But my point is, you know how much time this is going to be for all this development? I drew these lines straight. You know, that line could go here, and, you know, I drew it all nice and pretty, but the market's rarely nice and pretty, you know? So I drew it like that, but it could be some variation of this. You know, it could be a variation of that. And it may look like I just drew that at random, but I thought through every one of these waves. And I use a support or resistance in my mind to draw this, okay? But this type of action is the downward move that I'm describing, but look how long it takes to get there. And the reason is because the indecision that this large move up has created. This is so much easier if price just goes up here and comes back down and makes a new low. And then you don't have to fight about it anymore. Just like we were looking at the weekly chart a second ago on SPY, and right here, price broke through, came back up, retraced, couldn't make a new low. That tells you everything you need to know is going back up, you know. But here we came down, made this high, failed there, came down, failed to go higher, then broke low, made a newer low. But look at this V bottom retracement. It's insane, you know. So this could be, you know, 12 weeks, 15, 16 weeks, 18 weeks. I don't know for this thing. We're talking 4, 5, 6 months. So hopefully, while this has time to correct itself and kind of figure itself out, I can accumulate more Bitcoin, because I think once this low, if it's broken and the market starts tanking, a lot of money is going to run out of this market and it's going to look for somewhere to go. And I think Bitcoin is going to be the direct beneficiary of that. And I don't want to get caught holding, you know, 4 or 5 or 6 Bitcoin when that happens. You know, I want to have a bunch. And so I need Bitcoin to relax. You know, I don't want it to break out too fast and start, you know, running way up here. And as a matter of fact, if you look at Bitcoin's chart, you know, we've had kind of like a break in polarity to the upside here. So, you know, there's going to be some resistance here around what 6,000 and some change. And so I just hope it doesn't run too far too fast, because the capitulation in the stock market is going to fuel the next Bitcoin run, in my opinion. And I really don't want to miss that. So I need more. So, yeah. But I think, anybody have anything else? We had a pretty good crowd, but then somehow my system here shut everybody out, and then we lost over half of everybody. So that kind of stinks. Okay, well, if that's it, then I guess that'll be it until next week. I really appreciate y'all showing up for the stream, and man, I love doing these videos. I do. Like, trading the markets is just something that I really enjoy, and I spent so many hours solitary trying to figure out price and learning price action and studying and charting the charts. And it's fun to just be able to talk to other people that are interested in it, you know, and just nerd out over the whole deal. So I love doing these videos. So if you're on the video, please join me every chance you get, and throw some stuff at me and we'll look at it. And Tesla? Oh, sure, Tesla. You know what? Actually, earlier in the week, I think you asked me about Tesla. Sorry. Okay, so I don't want to be that guy, but if you recall, I'm not going to play it here, but someone asked me about Tesla earlier this week. I think it might have been you, Anthony. And I referred to one of my previous videos, and I told them, you know, I had to go through that video and find where I broke down Tesla. It was on a live stream. I think it was on February the 6th, if I'm not mistaken. It was one of the live streams. And the day that I did the video, yeah, it was February 6th, because the price was right here. And the question was, should you buy Tesla? And I said, you know, if you're going to buy Tesla, I wouldn't buy it here because you're at resistance. All right. And typically that's a low probability trade. My question was, where would you put your stop loss? So I said that you missed the run up and I would sell it here. I wouldn't sell it. I'm sorry. I wouldn't buy it here. Now, me personally, I would have sold it here. I tried to sell it here. I missed this trade by like 13 cents or 3 cents or something like that. I can't remember. But long term, I think Tesla's where it's going is going to be more determined by the fundamentals. There's a lot. Elon Musk and Tesla have a big task at hand. They can't get the price down below $35,000 for the car. Their tax credit for the electric cars went away, and the competition is stiffening. All the other major players are throwing billions of dollars at making electric cars, and Tesla's price is still in a trading range. Okay, so here's the trading range that it's been in basically since July of 2017. It put in this high. It's never really closed above that high on a weekly level. And then it put in a low here in April of last year, and it hasn't closed lower. So you're just in a range, and their whole, I guess you would call it, outlook is kind of in a range too. We don't know what's going to happen with Tesla. It looked really promising, but they're having problems. They're having a lot of problems getting the price of that car down. So their fundamentals are in flux. So I don't know what's going to happen with them long term. Short term, and how you would trade this, as I told on the last video, the monthly polarity is down. The weekly polarity is down. Price came back to resistance. Here, you had your reaction. You had your break of polarity. Here's a key to go short. That would have been a good trade if you got in. All right, now, that being said, this is bouncing off of a between 60 and 78% retracement of a bigger move going up. Okay, darn magnet. Okay, so you see, so we've retraced 60 to 70% of this move up, and that's where the market price is turning a little bit. So there's the potential that this last up move, now we're in that 60 to 70% retracement of this up move. There's a chance that you could get a turn here. So ideally, what I wanted to do was sell it here and get out somewhere around here. And like I said, I missed the trade by like 12 or 13 cents. It didn't come up to my level. I like really deep retracements, and I didn't get a chance to get in on that trade. But now, if I was trading this intraday, like as a day trader, like you, Matt, on a 2 or 3 minute chart, I'd be kind of weary in this area because there might be some buyers down here that cause this move up. And again, you're bouncing off of a 61% retracement of a bigger up move. But that being said, it's still not near the bottom of the range, which is down here on a weekly chart. And if you look at this from a weekly perspective, it looks like it's going to go further down. The direction's down on a monthly and a weekly. You would think it's going to come down and test this zone here. So intraday, like tomorrow, for example, you may see some buying pressure early on this stock, is what I think. You're going to see some buying pressure early intraday. And I don't know that that's going to push it back up and test up here and then it continue down. It could just punch right through. I think that's the least likely scenario. So for me, this would be untradeable right now. I was a seller here, and if I got the right trigger, I might buy it here. But right where it's at now, I really wouldn't do anything. Maybe look for, if you're going to scalp it, I'd look for buying pressure early in the morning tomorrow. And maybe you can make a scalp trade. And you'll get, because, you know, like I said, all these movements are just microcosms of bigger moves. So like this is a daily chart. So if you're going to trade this on an intraday chart, let's drop down to a 1 hour and show you what I'm talking about. If you're going to trade this on a daily chart, like we know that we're at a 78% retracement of this move up, right? So there's probably going to be some buyers, excuse me, in the market in this area. So if you're a scalper, you're looking for, you know, a short-term move, you may get some buying pressure in here that's going to come back like this, you know, and then go down. And it's a small move, excuse me, but intraday that could work. So I'd probably look for something like that. But anything outside of that, I wouldn't trade it. Excuse me, guys. I'm having some technical difficulties here with my breathing. So that's my thoughts on Tesla. Long term, long horizon. It's in a range. No idea what's going to happen. Short term, I would have been a seller. We were at resistance. Polarity is down on the monthly and weekly chart, which presumes it's going to make a new low. Intraday, there's probably buyers here, at least early in the morning. So be careful day trading it. And that's where I'm at. Hope that answers everything on Tesla. I should probably get a mute button. I know you guys don't want to hear me hacking up a lung, but sorry. All right, is that it? Anything else? All right, guys. Well, I'm going to go ahead and wrap it up and stay tuned. Like I said, the weekly review video hopefully will go up Saturday morning because my flight's in the afternoon. And then next week we'll be back on the same schedule. Of course, we'll be live again, and I'll be home. So, yeah, that'll be good. So it'll be Wednesday or Thursday, same time, 9 o'clock. And we'll figure it out. So thanks for joining me. Hope you guys have a wonderful rest of your evening, and I will talk to you soon.